The difference between success and failure in the stock market has nothing to do with your skill set. It has everything to do with your mindset. I'm Evan Lazarus, Chief Knowledge Officer and Mentor for T3 Live. I'd like to invite you to an exclusive trading education event in Charlotte, North Carolina on Saturday, March 16th. Attendees will learn what we believe to be the 5 biggest mistakes that plague the average trader and how to overcome them, with a specific focus on trading psychology and risk management. Reserve your seat at t3live.com or call the number below. I look forward to seeing you there.
Welcome to another StockTwits Q&A session. I'm Brittany Umar, joined by Mark Sperling. How you doing, Mark?
I'm doing okay. Long day.
How was your day today?
It was a good day at the office, but it's so stressful. It's unbelievable. It takes a lot of endurance in this tape to really stick with your positions and stick with your conviction.
Right.
But the fact is we are heading higher. It's just a matter of how we're doing it. Not necessarily conducive for the trader that looks at the level 2 every single day, but you got to trust your ideas and trust the charts that we actually are grinding a little higher.
Right. So with the Dow hitting an intraday high for the third time, what'd you focus on today?
It continues to hit highs, and you know my focus. What's the leadership? The leadership has been the financials, the Goldman Sachs, the Citigroups, the JP Morgans. You can go to the home builders. I always like the best in breed industries and then the best in breed stocks. And right now we're still in that stock pickers market where, quite frankly, you know, you got the LinkedIns, you got the Netflixes, you got the Amazons, you got the Googles. We don't put Apple in that category quite yet. If it breaks a downtrend, I'll put it back in that category. And you know, then I find 1 or 2 ideas that just come onto the radar. Those are my little basket of stocks that I look at pretty much continuously on a daily basis. And today that was the same. Made a lot of money in the banks. GMCR is a selective trade today, and a few other ideas.
All right. Well, we, of course, are answering your questions live, and we have a lot of questions coming in, so let's just dive right in and get to some names here.
Sounds good.
We have one from Stock One Trader saying, what price do I enter Under Armour?
Under Armour. You know, it's funny. That stock has been, you know, one of those stocks that I've either have had options in or have been involved with continuously for a period of time. It has not given you the trade that I particularly have wanted, but it's now trying to break that downtrend that you could say goes back a little while. I think 52.50 is that level if you actually put out the bigger, draw out the chart a little bit more. And if it gets above there, you're probably going to see the resuming uptrend. It's not the same stock it was at the beginning of last year. I think it will resume that. It's fine to take a stab around here. Don't spend too much attention on it. It just seems like it's out of play. Above 52, I think it gets back in play, and it becomes a stock that's a watchable stock on a consistent basis.
Okay, we're also getting some questions about Facebook. Kpar just wanted to know any opinion you have of it. We also have one from Market Picker saying that he's not in Facebook, but if he's looking to play the cup and handle pattern, which actually Scott showed us the macro cup and handle pattern on Morning Call the other day, he says, what would you recommend as responsible entries and stops?
I've been in Facebook now, I've been saying 26.50-ish was my price that I'm looking to really stay involved, get a little heavier. Technically, it doesn't look perfect, but now that it actually is beginning to form its cup and handle, and today was that trigger, in my opinion, short-term long, you know, above 28.20, which again, it did it into an announcement, went back down, got a lot of people out, and I was talking about on the VTF, you got to get involved on the pullback, not necessarily on the rally. The fact that it closed above that 28.20, 28.30 level, to me, is a good sign. I wouldn't be surprised to see this stock gap up tomorrow above $29. And then I think the next level, next line of defense is 29.30, and then you're going above to that 30 level, filling that gap. So I think in this area is a place to get involved regardless, and I've been involved, you know, below the 27.50 level.
What did you make of the news about the redesign of the news
everybody's from a fundamental standpoint, sounds good. I'm not a techie. I'm also past that little generation of, you know, I'm not 22 unfortunately anymore, but I am going to Vegas this weekend, so maybe I will be for a day and a half. The reality is, you know, a billion people are signed up. They're going to figure out a way to monetize. revenues, and they seem to be doing a good job on that front to actually moving in that direction. Understandably, it's going to take time to rev up, but they seem to be in the right spot.
Yeah, it's all about keeping that interest too, because they said it was something like 60% of users were taking a break from Facebook,
Right.
and that was the
Right.
whole idea behind it. But I think a lot of people are still pretty hooked. So let's move on to eBay. We have one from Common King saying, just what are your thoughts on eBay?
eBay, in my opinion, best in breed stock that is having a little dent in on the technical side. So, my opinion, it did break some key moving averages, but at the same time, I do look at 52 as a level it should hold, and I'll look at a smaller time frame to possibly get to a re-enter, to re-enter the stock. It's a stock I traded actually early in the week. From a move from 53-ish to 55, 56-ish, came down, I think, on some negative news. So I don't think there's a rush to actually get involved right here, but look for it to hold 52 over the next few days. Then you'll find another re-entry price.
Here's a question on a stock that we don't talk about too often. Ultra Petroleum, UPL. Jane here wants to know your opinion on that. She's got one more for you too.
UPL, it's a stock I do not trade, or I have not traded, but let me see if I can find my lines that I want to look at. Nope, that's not it. Let's see if I can find it. Let's see if that's it. Nope, that's not it. We'll figure it out. So basically, it did break a downtrend back to 1750. So to me, that looks pretty good. Is it too late to buy? Not necessarily, but 1750 would be a better price. 1775 for a move back to the 200-day moving average in 1993. It's not something I've traded on a consistent basis, but obviously big volume today, triggered along, and I think you're okay for a few days.
Yeah, actually closed up over 7%. So. But she wants to know your thoughts on the OIH as well.
OIH. I actually just put that in the swing today. Scott pointed it out to me. So again, a sector that's not that enticing, not that exciting, but Schlumberger looked like it was, trying to find a level to peek its head out again and possibly test highs. Sector that's quite frankly has been resting. Obviously with the ETF, you're involved with a whole bunch of the stocks, and I think it's fine right here to get involved small. I don't think it's an A trade. It's not an A position for me, but I think it can be a cash flow trade over the next few days.
All right, let's talk BlackBerry. Of course, BlackBerry got boosted recently by the news that after reports that the CEO commented that the Z10 was attracting more users of rival smartphones. So Kapar here wants to know what you think of BlackBerry, if you like it.
Well, I've been liking it. I love the fact that it's been downgraded about 17 times in the last 4 days, and it's still at the same level that it was downgraded at, and everybody hates it. And you know me, not that I'm a contrarian, because I'm not, but I think 1250, 12 is that level. So I'd be risking, I don't know if I'd necessarily give it to that whole number 12. I'd be risking $1.20 here for a move back to 16 for a nice 3-to-1 ratio. And quite frankly, I actually think you can probably keep it a little tighter, risking a 1250 for a move back to the 16 level. That's a very good risk versus reward. Understanding it didn't break a downtrend quite yet above 1380 to 14. You'll get more people involved and you'll get the momentum game back into play. But it's a stock that trades pretty much 2% every single day, 2% ranges. And, I like it in this area at the low 13s.
Fantastic. All right, let's talk some retail. We have one from Marcelo saying, I have a question about Coors. What's going on with this stock today?
That's a good
Down
question.
Almost 5%.
Yeah, you know what? I was looking for the news. I don't know. I actually despise how the stock day trades. And I've said this numerous times if you've been, listening to the VTF. I have no idea why it was down today. Technically, didn't make any sense why it should have gone down. The volume was okay on the downside, which makes me a little nervous. At this point, from a day trade point of view, I'm avoiding it. It has really not paid people for a period of time, so that to me is a do not trade list. But from a technical point of view, as long as it holds 57, 50, 58, this range, I still think it's fine on a longer term basis. Anything
that would make you interested in it, or this is really pretty much permanently on your avoid list?
My avoid list is very haphazard. I'll still, right. the day it's in play, I'll play it, but it's an avoid until that point. So it just, I always preach, and I talk about it in my morning meeting, I always preach, you got to know the characteristics of the stock. The technicals don't just give you the whole picture, and obviously that's why we do these courses and we do the education, because the technicals are one part of it, but the other part of it is actually understanding your own stocks and how the characteristics of the stock's trade, does it play to your strengths. This stock quite frankly, for a day trader, does not play to their strengths.
Too much stress, right?
Yeah, too much stress, not conducive, not conducive. Doesn't follow the rules very well.
All right, Market Picker here says, what do you think of Sprint's weekly chart? He's asking, breakout above 6, would you be buying here?
Yes, it's a stock I've actually had options in for a while, and I think they're either April or May, above $6 calls. Looks good. Gets above there. Let's go to the monthly. What do we see on the monthly? Gets above there. You have 8 to 10 in the book. So, I don't think it's something that you got to certainly concentrate on beyond, but I think it looks good, and I certainly would be looking to get involved around here below this, and obviously the trigger above 6 would get me more involved.
Do you see similarities with Sprint's chart to Bank of America's breakout a while back? So you noted that as well.
Bank of America is a little different. Back in 2000. What was it, 2011, 2009, bottomed and has really just traded accordingly. Back in 2011, it has ebbed and flowed. I think it's a good-looking chart, Sprint. I don't know if you want to compare the two, the different categories, different, companies, but overall it looks pretty good.
All right. Well, speaking of Bank of America, we have a Bank of America question here from Declan saying Scott had strong upside conviction for the recent Bank of America pullback. Please explain reasoning, if you're able to explain Scott's reasoning, as short-term uptrend was breached and 8 was below 21.
Yeah, I don't know if I can explain Scott's reasoning. But my reasoning, and if you were listening to me, I felt like 11. Look at this. It's the top third of its trading range, and the lines are already drawn. So you can actually see stocks trade within ranges. You obviously can look at it from a day-to-day point of view. They're smaller, tighter ranges, and you got to look at smaller time frames. But if you're looking at a daily chart, you want to see a stock hold the top third of its trading range. It went from 1250 all the way down to 11. For a few days, it held that 11 level, and I think at 1120, 1125, I ended up buying it. I had to probably hold it for 2-3 days. I'm still in a little bit, but I sold the majority of it the last 2 days, and it shouldn't basically rest at this point in time because now it's at the top end of its range. But that's the key. Top third of its trading range, best in breed, banks are leadership. You look for stuff to hold that range, gives you a buying opportunity. Even if it's below some key moving averages, you might not get as aggressive enough, but you respect your stops, and the stops was roughly around 1090.
Okay, before you mentioned that GMCR was on your radar today, we have a question from Worm Tradewinds saying he's got a bunch of stocks here, but he wants to know if GMCR is good to go long right here.
I talked about it this morning. It was one of the things doing my homework last night, I had it circled, which is, which means I want to get involved with it that day. And it, gapped up, I think, on some news or some K-Cup news. But regardless, to me, knowing that I think 30% of the float is short, might be a little less than that. I'm not sure. I think 30 million shares is short. I don't know what the float. And it obviously has been resuming, an uptrend over the last 2 months, 3 months. I think this is a candidate to go a lot higher, personally. Here's the weekly chart, just so you can just see. Obviously, it's gotten beaten up. Stock was $120. I'm not saying it's going back to there, but it moved back to 55.60. Not crazy. And I would use probably 49 as a gauge, as a stop. So even right here, ideally 50 was that level. Even right here, risking $2 for a possible $8 move up to the upside, not terrible. Longer term time frame though.
All right, are you a K-Cup guy yourself?
No, I'm an instant coffee guy, at least at home, and then too lazy to make the cup. But I do like that, and they don't do enough. They
really
flip
the thing down and push the button.
I know, but they don't make enough of the coffee in the K-Cups. You agree?
That's true. Yeah. Well, there's a large setting, but you're right. Yeah.
Oh, is there a large setting? You see,
yeah,
there we go. From the technology standpoint, Brittany, you're much better than me at that.
I'm a K-Cup girl myself. But let's get to the rest of the stocks that Worm Tradewinds here was mentioning. Unipixel. Do you follow this one at all? UNXL.
UNXL. You know what? I traded over the last, selectively over the last few weeks. Not very much. I know Steve on the VTF trades it pretty consistently. It's in a nice uptrend. So basically, it's respecting its 8-day moving average and even the 21-day moving average. So every time it gets to that key moving average, which right now is the 8-day, I'll be looking for an opportunity to buy, and it's doing a nice basing. It's basing enough that it seems like it's buyable on every pullback right now, and it has a nice uptrend, and that's how I would look at it. Right now 2350-ish would be a place I'd be definitely getting a little bit more aggressive on the upside, and I think it's heading higher based on what I'm looking at.
Okay, and Warm Tradewinds is also interested in going long Yelp. What do you think about that?
I have not traded that in a while. You could put that in the same category as some of the other internet stocks that have obviously shown some tremendous strength. LinkedIn certainly seems like the best in breed. Facebook today looks fine. Is it an A trade? Is it an A idea? Not so sure. But if you're going to do it, respect the fact of the key moving averages. I do not want to see this thing go below. If you're going to get it right around here, I don't want to see it go below probably 21. And a move back to 28 is not out of the cards. And if we're staying in this, trending market, these stocks will again regain some composure and regain some strength. This would be the level to get involved. Don't spend too much attention on it on a daily basis, though.
Okay. How about Netflix? Trader RL saying, what are your thoughts on Netflix, especially before March options expiration?
Well, Netflix has been one that I've been talking about now since that earnings call, and it held that earnings call, and it's been basically a best-in-breed stock. It's back on that best-in-breed stock that's still heavily shorted. Every pullback is buyable, and today, even just looking at it right now, it bounced off the 21-day moving average, and so to me, today was the day you possibly look to get involved. I was saying, if it gets 175, 170-ish, I'm getting involved, but it's held at this point the top third of its trading range. I got involved today. I'm holding it overnight. We'll see what happens. I would expect this stock to move to the top end of its trading range, probably the 190, 192-ish range short term. I think it's going to tag 200 also near term.
Okay, moving right along here. We've got lots of names. Home Depot. Here's another one from Market Picker saying, given that today is Home Depot's first red day after its big move, do you think another day or two of consolidation above 70, then it goes?
Yes. Unfortunately, I did not trade it from the 65 all the way to 70. It's not a name I trade every single day. Now that it's up here, I would wait at least another day or two, possibly more. Let the key moving averages play catch up. Let some digestion happen, understanding it just moved percentage-wise, decent percentage. And, from that point of view, you'll probably get another re-entry around 69.50, 70-ish. So it still looks good.
All right, well, keep the questions coming, guys. We're going to take a quick commercial break, and we'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and answering your questions live. Mark, let's just jump right back on in here and talk Chipotle. We have one from Common King saying, what do you think about Chipotle? Above 200-day on the daily and just below 50-day on the weekly.
If you've been watching the VTF and listening to me, it's a stock. It's been a love-hate relationship for me. All year. I got caught in that downdraft, when it gapped down, and then I got back involved, around 300, back to the 315 level, and I re-entered again last week around 315, maybe 312, I don't know, back to 330, which I got out of it the other day. It looks good. Yeah, it regained some composure, and it looks good across all time frames. A little digestion here would be respectful, and that's what I would expect, but overall, it looks like it's going to become a go-to stock at some point in time this year. For the last 6, 7, 8 months, it really has not been. But if you go to Chipotle, is there ever not a line?
Never.
Never. never. So
it tells you something.
and they were saying they have pricing power, which I sort of agree. You can raise the prices $1 on probably everything. I don't think the lines are going to disappear. So I like it technically, fundamentally. My little fundamental test, which means there's lines at every store, looks good.
And you like it as a customer too?
I do. I do.
All right. Well, here's a strategy question for you. Market Picker says, when you're in a swing with a defined stop, do you ever hit out of it if it starts to look faulty, even if it hasn't hit your stop? Yes.
But overall, you get into a swing for a whole idea. There's two different ways to trade it. There's short-term trades and there's swings. You should respect, the stops on the swing. But if I see something changes, if some headline news, if the market conditions change, I can adjust it on the fly accordingly. Usually there's a gray in a lot of these things. I might reduce a position. I might not necessarily get all out, but reducing the position to mitigate some risk is something I will do consistently.
Mr. Traveler here, I like his name, like his handle here. He says, what do you think of PBR? Volume has been through the roof.
Yeah. I wish somebody told me about it a few days ago. It looks great. I mean, obviously it's a bottoming pattern. That stock used to be a go-to stock years ago. I remember that one, PBR. It regained some composure. Do I think it's viable right here? I'd probably wait. Two big gap ups. I'd like to see it create a new trading range, which means ideally if it comes back down to 1650, probably be viable again. As long as it stays on the right side of the moving averages, I wouldn't be chasing it yet.
Okay.
You missed a move, basically. Or I missed a move. Somebody missed
Unfortunately,
a move. Somebody missed a move.
Mr. Traveler needs to give you the heads up.
I know, thanks, bud.
All right, and back to retail for a second. Let's talk Sears. Trader RL saying, what are your thoughts on Sears? The chart setup looks good.
Shield, the chart setup does look good. It's a tough one to trade. Obviously, another one we're talking about, Eddie Lambert favorite, heavily shorted. I've tried it a few times at this area, 59. First line of defense, 200-day, 51.50. If it gets going, we know how this thing can get going. It's, understanding that a lot of the float is short. So yes, above 50 seems to be the trigger. With some volume, if there's some volume, I would look for a few days move in this stock, probably to 55 to 60 range. So it looks good. Certainly keep it on the radar. It has had a few false starts, so just respect that also.
Okay. Jane has a couple of stocks here. She's looking for your thoughts on National Oilwell Varco.
Symbol.
NOV.
No. Really, that's I don't think I would have known National.
You learn something new every day.
I know NOV. I'm just again, oil stocks. I talked about them before. Also, not the sexiest sector in the world. It's not something I spend a whole lot of my time or attention on, just because they don't pay you every day. It's really you jump in for a few days and you get out. It is the bottom third of its trading range. So again, for me, that's not where I love to buy my stocks. But if you're going to be looking to get involved, you'd love to see it get above some key moving averages, using a 65 as a stop, possibly a trigger long above 68, 50, 69, breaks a short-term downtrend for a move back to 72. That's fine. It's not an A trade for me, but it's something that can give you cash flow. Not bad.
There are actually some headlines out there calling it undervalued. So
from a fundamental standpoint, probably. Like I said, using 65, which is touched a few times, seems like that's the right level to get involved. A little boring for me, probably the right level though.
Okay. KKR Financial Holdings, KFN. What do you think of this one?
Financials, it's the place to be. Where do you want to be in the financials? I'll give you the list. You could say the mid-cap regionals, the STIs of the world, the BBTs, but quite frankly, the Goldmans, JP Morgan, Citigroup. If you want also another financial, BlackRock. It's been, it's like the financial on steroids. That's where I'm going. That's where my money's flowing if I'm going to be looking to get involved. KKN, not bad. KKN, KFN?
KFN.
KFN, not bad. If you're going to use a level, should 1075 stop. If you're going to get involved around here, yes, it can make a nice move. Here's the weekly chart. Looks good. but it's not something I really trade on a consistent basis. It seems like it's very tight, very slow, but the financials are the right place to be.
Right, with the financials being the right place to be, and with how much we've been talking about it on Q&A, on Morning Call, we've been talking about the banks, and not a lot of questions about the banks. We're not getting a lot about JP Morgan, BlackRock. What do you think? What do you think that's saying?
I think the banks are going to keep going. I think it's the year, where it was the year of the home builders last year, I think it's the year of the banks. We're already seeing it. They've already been up a chunk, a bunch of them. So ideally to get back involved, and I know the stress test is tonight, or it happened already at 4:30. They look good. They just look good, all of them, on every time frame. They look really good. So to me, they're not close to highs. You can go back to just to give you an indication. Here's your monthly on Goldman. Goldman was 250, 5 years ago. We're at highs. We're at 5-year highs, 6-year highs. Goldman's at 156. Lots of room to run. JP Morgan, a little different, basically almost back to 5-year, 6-year highs. WFC, the same thing. BAC, obviously we know that's not even close to 5-year highs. But understandably, these banks have a lot of room to go if they really want to press it. Citigroup, same thing. It's nowhere compared to where it was. They have more room, guys. That's really what it comes down to. Keep them on the radar. They should be a go-to sector. You should learn how to trade the ones I've talked about consistently. They give you, it's a gift that keeps giving right now, on the long or the short, quite frankly. And obviously over the last few weeks, it's been certainly the long side.
What about TICC? This is a name I'm not as familiar with. TICC Capital.
I'm not either. If you're just going to go on the technicals, which is what I normally do anyway, using. Seems like a tight, it doesn't seem like it has enough of a travel range for me to get excited about it at all, but I would respect 10 as a stop right now if you're going to be involved. And doesn't mean it probably can go higher. Let's see the weeklies. And if it gets back above 11, you might get some momentum back to the 12 level. So it's not a bad looking chart from a trading perspective.
Okay. All right, here's one from Allison. Can you please look at ISRG, and is it having a constructive chart action from panic sell last week?
Well, constructive to the downside, I guess. The fact that it had that news yet last week, then it was defended, and now it's rolled back over, it's an avoid for me. You can make an argument, over the next few weeks that maybe it holds 500, and that's fine. But right now, it's an avoid for me. If it comes back down up to its 200-day, it might be even a short, which I don't talk about that often, but it's a broken stock for now. So from the long side, I'm certainly avoiding. And from the short side, I would only short it on bounces.
Okay, HBAN, Huntington Bank shares. This question says monthly above 8 would be a breakout, but relative to other banks, it's lagging. Is it worth a look?
Well, it's a regional. It's a regional. The regionals, the Key Corps, the STIs, the BBT, they're fine. They're not going to give you the bang for the buck every single day. It's much more of a swing trade or just an invest type of stock. But yeah, looks good. Looks good. Above 8, I agree with you. You can get, on the monthly, so you're going to have to wait, or is that the weekly? On the monthly, you're going to have to wait a long time, but, there could be a move maybe at the end of the year back to the 10, 12 level, which percentage-wise is a respectable trade. Okay,
and actually, Common King's chiming in here and says, since you're bringing up banks, how about AIG?
AIG. It's like I bought that, I did buy that on the pullback the other day. For some reason, I sold it. It's now the hedge fund. Every hedge fund's in it. Every institution seems to be in it. It looks good. Here's the weekly chart, so you can see what it can become. Monthly won't even do its justice, but it looks great. It looks great. Is momentum going to actually kick into it? Maybe above 40, 42. You'll get some fun trading again, and obviously, then looks like above 43. You'll get really, you can get some movement back to the 50 level. You see these two big bars back in 2011. We'll have to wait and see, but it's very constructive, and it looks good in all time frames.
Okay, Marathon Petroleum, Rogue24 says, what do you think of an over 90? And no, he actually tweeted us twice here and says, sorry, he meant 89. What do you think of an 89 entry on Marathon Petroleum Core MPC?
MPC. Yeah, it's certainly an uptrending stock that is respecting It's 21-day moving average, and so I would say first line of defense, you could probably take a stab around 86, and if it comes back down to 82, that would be where I would get a little bit more conviction on the idea, and it looks good. That I would wait up here. Maybe if it digests around here and some key moving averages move up, I might get back involved for a short-term trade. But on the pullback, I would get more involved.
All right. Well, we've talked, of course, a lot about Apple. It managed to close at least up 1% today. So, what's been your experience with Apple as of late?
I hate it. It pisses me off, I gotta say. Somebody said on the chat last week, why is nobody shorting the stock? I'm like, as a trader, you have to know where you live. You got to know what you're good at, what your strengths are. Not my strength. My strength isn't shorting a stock I believe in. Every rally or after it's come down 300 points. I can't do that. It's not how I trade. What I can do is I'll find the bottom of the stock and be able to ride it 100 points to the upside. So that being said, it's been a stock that's been frustrating, quite frankly, for a majority of the year. So basically January to, I would say, a week and a half ago, I have not traded it that much at all. The last week and a half, I've started getting a little bit more involved. It gave you a few false entries. It's still in a downtrend, but short term above 435, you have a little room to 450. And it breaks 450, you have a bigger downtrend that, quite frankly, you can make a real argument that it can actually run and resume its uptrend. Do I think Apple will recover? Yes. The fact that everybody hates it, it's getting close. It's getting closer. But is it an A trade? No, it's not Google. It's not LinkedIn. It's not Netflix right now. It doesn't have the same snapback. Remember, guys, it's momentum. This stock is totally momentum. Everybody will jump in when it's ready. We're not ready yet.
Right.
But there's cash flow. So just think, if you're going to get involved in smaller time frames, look for quick bursts and take some trades. That's all.
Right. But if you're not,
if you're looking for a longer term from an investment point of view, it's not my gig, and what I look at, it seems like it's trying to find a short-term bottom. Short-term.
Well, you're definitely not alone with hating it right now, or at least.
But you know
days.
what? Again, it goes back to the fact when everybody hates something, what happens? Normal rule of thumb is it begins to turn. When everybody loves something, they loved it at 705 and everybody hates it at 430, what normally happens? You just got yourself a nice little discount. Probably, somewhere around this range, you got to be able to handle the ebbs and flows.
Right.
It's gonna probably be a good buy.
Right. Well, of course, we'll keep talking about it.
Right. Downtrend though, 450 is a bigger downtrend that if it breaks, you'll get some momentum.
All right. Well, tell me, do you dabble in the Chinese names at all? Chinese social names?
Yeah.
Yeah.
Which ones?
Well, we have a question here on YY.
YY? No.
Yeah, reported monster earnings today, but I just checked and the stock was down almost 10% today.
It had a nice run. So, again, Chinese stocks are tough sometimes just because the transparency or lack thereof. I would say, another day or two, revisit it again. It seems like it's just not ready to, get off to the races and ready for prime time. But at the same time, 1650, 17 might be worth a look again.
Any other Chinese names that have been on your radar?
Well, the Baidu's, the Sohu the other day that, sniff rumors that's why it went from 40 to 48, taken private possibly. They're in downtrends. They really are. Sina, Baidu, they're in pretty much downtrends. I really have not really focused a lot on it. Baidu maybe above 95 gets interesting again. NetEase not as bad. CYOU not as bad. But I have not focused. It has not been my attention for the most part.
Okay.
I wait till I get the sector becomes in play a little bit.
Right.
Rather than try to pull my hair out and trying to anticipate something that, from a trading perspective, that's not really there yet.
We talked today on Morning Call about the possibility that casino stocks may come back into play. Lots of news about boosting them lately. Any that you like right now?
The only ones I play, if I'm going to trade it, it's LVS, Win, MGM. You could make an argument for Penn or MPEL. They look okay. I haven't looked at, probably 2 weeks ago was the first time I started looking at LVS again or Win. They have not given you a good conducive trading setup, but they're okay.
They're better than MGM at this point, right?
Yeah, LVS and Win, if you're going to trade them from a day-to-day point of view, it's much better. And right now you're looking at, it should hold 47.50. a move back to new highs. And again, let's pull up the weekly chart. That is the weekly, the daily chart. You can see it's consolidating. It's consolidating above 50, which is good. I just don't think it's ready for prime time yet. But it comes back down to 50, probably a place to get involved.
Okay. Are you familiar with MNTA, Momenta Pharmaceuticals? We have a question from Ben Carlos saying, what do you think of this one?
I don't trade it. Biotechs are tricky. You better respect the fact and do some research. Certainly if you're going to make it an investment versus a trade, respect the fact of understand what drugs are coming out, understand when FDA is, when certain announcements are happening, because FDA, as we've seen it, AFFY the other day, I know it had a good day yesterday or today. I mean, on an announcement, it gapped down and lost 90% of its value. So I don't know the stock per se. Technically, it looks okay. A lot of stocks are best in breed right now. If you want to, the biotechs, my best in breed, PCYC. I would actually begin to put INFI on there, which I just recently started to trade. Celgene, certainly. Amgen as a big boy. ALXN is okay. It hasn't been trading as well on REGN. Those are my fave biotechs right now that I can really dabble in. And BIB, I would put that on there too, because best in breed and chart-wise.
All right, well, with payrolls report out tomorrow, what will you be focusing on heading into trading tomorrow?
I don't know if it matters. Obviously the number is going to do what it's going to do. I think we're grinding higher still. I think enough people don't believe. Enough people want to buy on the pullback. Enough people won't get invested. It's inevitable. Too many people are saying it. This rally doesn't make sense, or we'll have a rug pull. We do it for 2 days, and then we resume our uptrend again. But we just had one a few days ago. So I think we're, based on what I'm seeing on the S&Ps and even the NASDAQ, which is trying to catch a little bit, we've digested now for, going back to this daily chart, we've digested for a good 2 months. We've tested a high, came back down, tested a high again, and we broke through. That's good constructive behavior, which means in most cases we're probably going to be grinding higher. Doesn't mean it's going to be blockbuster like everybody wants, but it's going to be slow drips and drabs, which is what's happening. Up 30, up 20, down 20. And in between you can get obviously the ebbs and flows of what the tape's giving you.
Right, exactly. And there will always be those headlines saying the
contrary. And you have all these people. Okay, fine, but let the technicals tell you. I'll be. You could feel when there's pressure building up on the other side. It starts to get a little sloppy on the long side. Stuff doesn't make so much sense right now. Stuff is still making sense on the upside, and we really just broke highs 2 days ago. So. Right. It's not like we have 3 weeks of new highs on our hands. It's 3 days. 3 days.
Exactly.
So we're still early in the stages, especially long term. But understand you do get rug pulls along the way. You got to approach. Hence 3 days up in any stock. I'm probably taking some stuff off.
Right. All right. Well, thanks so much, Mark, and thanks to you guys for sending in such great questions. Meet us right back here next Thursday for another StockTwits Q&A. Have a great night.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.